Hey guys, welcome to this week's edition on trading and investing. This week we are going to review one of the famous indicators known as MACD. First, I will begin with what is MACD and how it works. Then I'll explain the MACD indicator step by step. Then I would explain what are the common mistakes people make when they use MACD indicator. Thereafter, I will walk you through the process of how correctly we are supposed to use MACD histogram to identify momentum reversals. Then I will walk you through the process of how to use the MACD indicator to increase your winning rate and success. The last step would be how we can use MACD histogram to understand explosive breakouts before it happens. Okay, let's get into the lesson. Okay, let me begin with plotting the MACD indicator on this chart. You may be using different tools. You may not be using the same software. I'm using TC2000 here, but irrespective of whatever software you use, you just go to indicators and search for MACD and add the indicator to the graph. First thing you may want to notice is I don't have too many indicators cluttering my chart. All I have is only the price and one indicator MACD at the bottom. There are several indicators available for you to use. You just need to choose one or two to get confluence or confirmation on your trading signals. You don't want to clutter your chart with too many indicators on the screen. Okay, on the top I have price here as a green bars, and the bottom I have the MACD indicator plotted here. What is MACD? MACD indicator basically has got two lines. One is MACD line, other one is signal line. MACD line is nothing but the difference in exponential moving average prices of 12-day versus 26-day. So the difference between 12-day EMA and 26 EMA is what plotted as MACD line. The signal line is nothing but the 9-day EMA of the MACD line, which you can see here. So when you see here, let me zoom in a little bit just to help you understand. If you pay close attention here, this is where the MACD line is. The signal line is crossing over the MACD line. Okay, the traditional way of using MACD line, what you normally see online in most of the YouTube videos or any online material, they would be advising you to go long when the signal line crosses from below to above the MACD line, and same way when the signal line crosses from above and below the MACD line, they would be advising you to go short. This is the traditional way, and we are not going to look at MACD in that manner. We are going to specifically cover how to use MACD along with price action and how to improve your signals by combining price action and MACD to increase your success rate in this video. Okay, next we are going to plot the MACD histogram in this chart. So I will go to edit, and you see that here its plotted style is line, and let's say I switch to histogram. Now you can see the histogram. So when you look at the histogram is nothing but the difference between MACD line value and the signal line value. When you plot it, that's how it appears. Now, the next step would be to look at what are the common two mistakes people make when they use MACD indicator. First thing is they are trading the MACD crossover. Second is misinterpreting the histogram. Let's look at the common mistakes people make. First thing is trading the MACD crossover. If we look at this chart here, this is Apple's 5-minute chart, if you look at it here, the MACD signal is giving you a signal to go short at 461.23, and it's telling you to cover back at 463.48. Basically, the stock has went up and the MACD signal has given you a sell short signal, which is completely opposite. In other words, if you blindly follow the MACD crossover, you'd be losing money with these kind of whipsaws when the market is in sideways. You can see that Apple chart has been in the sideways in this area. Okay, now let's look at how we can use MACD histogram in a correct way. Let me draw a support line. It's the same Apple chart. The only difference is I switched it to candlestick pattern. It's the same chart. From line chart, we changed it to candlestick pattern. Okay, if you pay close attention here, yeah, see, you can see that the price is bouncing off this range several times in the day. Let's say you started the day today. You started at morning 9:30 here. The price started here. It's been going up and down, and then it came back to the same level, and then it bounced back. Then it broke down strongly. Now, if you look at the histogram at the bottom, when this bar happened, right? It never went into positive territory. So you don't need to worry that the market might bounce back. So the protection you have is, or this, I would say not even protection, this confluence of MACD histogram is, it is sending a strong signal. It is not going to bounce back. If you keep following this histogram, it went negative up to here, then continued again negative, and then here the price broke down, and then you wait for the confirmation on the next bar. It's still below the support line, and MACD histogram is moving towards a trough or the negative peak. So this is one area. At the opening of this candle, you could have gone short, and when you observe next candle, the price tries to go to the support and fails. Second try fails, and whereas histogram keeps moving in the trough, trying to form a trough or the valley to confirm that your short decision is right. And then as far as exit is concerned, you should be setting a based on your risk to reward ratio, you should set an exit price. That we'll cover in the next chapter separately. As far as this video is concerned, it's only about MACD. And if you look at the same chart, again, see, price bounced off in this level once, twice, thrice, fourth time. Fifth time it broke up, right? After it broke up, any support line, until it breaks, it acts as a resistance. Once it breaks, it becomes support as far as the lines are concerned. So in this case, the same resistance, or this line was support till here, it became a resistance for this area, then again it became a support. So next time when the price comes to test that, it's going to act as a support for the price. You could see that here it tested in 3-4 candles and then it bounced back. So let me summarize. The correct way to use MACD histogram is a 3-step process. First, you wait for the price to come to the support or resistance area. Second, ensure that MACD histogram shows strong momentum, either in the upside or downside, or in other words, peak or trough. Third, wait for the price rejection to occur before you take up a trading position. Okay, now let's look at how you can increase your winning rate using MACD indicator. First, it's only a 2-step process. First thing is you need to define your higher time frame. Then in the higher time frame, if the MACD line crosses above the signal line, then look for a long entry. And if the MACD line crosses below the signal line, look for a short entry on the entry time frame. So basically there are two time frames you need to define. One is the higher time frame, second is your entry or trading time frame. Let's say you are trading on the daily time frame. Then first step would be, we are at the Apple candlestick chart. A higher time frame would be anything with at least 4 times to 6 times. On average, normally people use around 6 times your trading time frame. So let's say you are on a daily trading chart, you can look around a weekly chart, which is about 5 times, which is perfectly fine. Anything above 4 is fine. So you look at the weekly chart of Apple. If you look at the MACD indicator, if you look at here, at right this point here on May 15th, the MACD indicator has given a buy signal on the weekly chart. That is your higher time frame. Now let's go to your trading or entry time frame, which is the daily chart. Now we need to look for an entry. What's the right price to enter in Apple long? So where is May 15th? Let's get to May 15th. Here it is. First step is, as I mentioned, you're going to look for the better entry. So you draw your support resistance line here. See, I have drawn a support resistance line because it touched here and turned back. So this was a resistance point. And then again it touched here, then it bounced off of it, then it took off. Now if you look at it, so this is a very valid support resistance line because it's going to touch here 1, almost touched, 2, 3, 4, 5, 6 times it has touched the line. So this is one of the valid support resistance line. So we saw on the May 15th weekly time frame a buy signal in the Apple chart. Now we are looking at the daily chart. This is May 15th. On May 16th, if you look at the opening, I would say wait till May 16th closing if you want to be really sure. The price has closed above this support resistance line price of $304.83. And you already have a signal from MACD for on the weekly chart, a buy signal. On the daily chart, you are looking at the price, it's above the support resistance price, it closed above that on May 18th, the next working day. You could have easily gone long on Monday at the close of the day at the price of, the close is at $314.96. Then you could have stayed in this trade for a long period and a lot of money. Now as far as the exit case is concerned, you could either exit again using the higher time frames sell signal, or you can use your price target, or you can use the support resistance for exit. Personally, I would draw the support resistance line and get out on the next resistance and book the profit and wait for the next better entry. If you are worried about losing out on the run after you exit, you could take 50% of your positions on the nearest resistance and let the balance ride, so that you don't lose out on the gain if the stock continues to run. At the same time, you also book some profits. Now let's look at one more example of when to go short or sell short. This is again the same Apple chart. We are looking at the weekly chart. If you look at the MACD signal, it's giving you a sell signal on February 28, 2020 at the price of 273.36. So the same two-step process. On the higher time frame, which is the weekly time frame, you got a sell signal. Now let's go to the entry time frame, which is a daily trading time frame, and see how we can get a better entry point. Do you remember the support resistance line we draw on the last example? We are looking at the same support resistance line here. I have not changed anything here. Here is February 28th. You got the sell signal on the higher time frame. Now, your resistance is a few ticks away. It's at $304.83. You got a sell signal at 273. Now, what you do? You patiently wait for the better entry. You let the next few days even though you got the signal on February 28th, you wait for a few days, the price is bouncing back and turning around on the resistance point. After it hitting here, the next day, which is on March 4th, March 3rd it hit the resistance, and March 4th it closed below the resistance, and you already have the signal, a sell signal from the weekly time frame, and you got confirmation or confluence with the price rejection at the resistance line on March 4th at the price of $302.74. If you want to be so sure, you can wait one more day, but if I were you, I would go short at the close of this day because it's a confirmation that the price got rejected. If you prefer, you can wait till the next day and it's confirmed that the price is closed below the previous day's price at 292.92. So you could have gone short on March 5th or March 4th by setting your stop loss just few ticks away above the resistance price to protect against any unexpected losses. Trading is never a guarantee, we all know that. So there is a risk involved to that. So you want to protect yourself against your risk by setting the stop loss whenever you get into a trade. There are several ways to establish the stop loss. We could use ATR, we could use a fixed price amount, we could use a fixed dollar amount, but we could cover all of that in a different video. As far as setting stop loss and risk to reward ratio and all concerned, it would be a separate video. I'll explain that how we can set up a better stop loss and profit targets on every trade. So just to summarize, if you would have gone short at this day at $302, you had a potential of covering about $78 over the course of next 10 days. And if you look at the long trade, which we discussed earlier, if it would have gone long, let me go to the weekly chart and show you that. If it would have gone long on May 29th at 317 or at May 22nd at 318, you would be still holding the position and you'd be sitting at the current prices at 459, today's closing price. So 312 to 459, you are looking at around $137 gain over the course of few weeks. And that's about it as far as how we can correctly use MACD indicator. Next, we would look at how we can use MACD histogram squeeze to identify the explosive breakouts before that occurs. This concludes the topic for this video. I hope you like this video. If you like this video, please like, share and subscribe so that I can bring more quality content which is useful to every one of us. Thanks and have a great day.